Good evening, everyone. It's Monday, May 24th. I'm Charles Brown, Portfolio Manager with CB3 Financial. From COVID, U.S. politics, the world economy, to clarity. This is CB3 Live and your Monday market mashup. Tonight on Target, we're talking about the market rebound. Fortunately, the last couple days have been pretty strong. And summer plans, a lot of changes I want to tell you about here, so stick around to the end, please. S&P had a really strong day. This is unusual for a Monday. Monday's typically, of the 5 days, the weakest historically over the last 50 to 60 years, but strong today. NASDAQ had a great day. Trying to play a little bit of catch up here, which you'll see on the next screen. Russell's still in first place for the year, but the Dow right at its heels, S&P really at both of their heels, and the NASDAQ now is about half of what the market leader is, the Russell 2000. Now, it's been far less than half, maybe 20%, 25%, but now definitely picking up some strength, and we're glad to see that since we do like the growth aspect of the stocks that we choose. So one of the unheralded stories of this particular earnings season, so we're in the second quarter, we're reporting on the first quarter of performance for stocks. And this, I cover this in my Thursday night show, but the earnings beats, 87% of stocks actually beat their forecast earnings, and 78 beat their revenue. So that's top line and bottom line. Revenue would be the top line, obviously earnings the bottom line. Bottom line is what counts because it's what you're keeping as a company after taxes and paying for all your people and supplies and everything, cost of goods sold. But this 87% number is literally the best in history. And it's just a good thing to see whether the market actually, and maybe because it was so strong, a lot of growth stocks did not respond positively, even when they had knock it out of the ballpark numbers. And it could just be because people were wanting to rotate out and wanted to sell at a high, so to speak. Well, they think it's the high. We'll see. And then move on to a different part of the S&P 500. This is called sector rotation. As you well know, I am a firm believer that we are in a secular bull market, so the rotation out of certain sectors, such as consumer discretionary, the communication sector, and certainly the technology sector, into things like financials and materials. This is the sort of move you're seeing here over this second quarter, and that may or may not continue. There's a lot of data on here, but I'm just going to highlight what's in green. So the number of up days over the last 70 years, okay, since 1950, that's a lot of up days versus the down days. So that's why, in general, I'm not someone who short stocks. I get asked that from time to time. Why do you short stocks, or why do you not short stocks? And the reason is because most of the time the market goes up. You can see the percentage in the second column there, but I highlighted in green. This is data compliments of earningbeats.com. Really appreciate that. Tom Boley is the rocket science smart guy over there, and really appreciate this data that we're able to use on our site that they produce there in their research. Cumulative gains, look at the different calendar periods. They're just, he does all this research. It's fascinating to me. The cumulative gains are pretty amazing. Then if you look at all days, 636% return since 1950. Okay, obviously there have been stronger gains than that. At other times, sometimes there have been losses. At sometimes, obviously, the big pullback in 2008, 2009. But the annualized return, and this is a number I've referenced before, around 9%. So there's been some concern from our clients that, last quarter wasn't exactly, the best. Now, I'm talking about the second quarter, so we're still in the second quarter. Actually, still have one full month to go. But this quarter, the second quarter, has been difficult from a market performance, not an earnings report, performance, because that I just showed you on the previous screen has been phenomenal. But last year, our two growth programs, Capital Growth and Strategic Growth, gained 63.5% and 62% respectively, which is considerably more than the 9%. So even if we're flat this year, we average around 30, 31%, probably not a bad 2-year period. We, of course, hope to do better than that, but I just want to send you this data from time to time so that you realize it's just really difficult to get that 9% every single year. And of course, if you did that, there would be no losing years either. And that's virtually impossible to happen because there just are dark times on occasion in the stock market. So this is just another important slide. This is showing the rebalance on the BlackRock Growth ETF. Now, why is this important? Because one of the areas that we were invested in last year was information technology, which had a phenomenal year. But the trailing year on that, look how technology is underperforming. So actually, what happens in exchange traded funds is they re-weight them from time to time in the 11 sectors. So you can see that infotech, clearly the biggest sector last year in May of 2020, now has a 17% weighting, down 23%, the biggest change ever in this ETF. So when you're a portfolio manager, you're managing money, you go with probabilities and past performance. It's very hard to predict the future. Even Warren Buffett doesn't do that especially well. He looks at past performance and projects that into the future, but knows that there's no guarantee, which is why we always use the disclaimer, past performance is no promise for future performance. But the consumer discretionary, which is another of our three favorite sectors in the S&P 500, also got a downgrade. So did healthcare, which healthcare is kind of like fifth on my list of the 11 sectors. And these were sectors that simply underperformed, and that was reflected in the most recent quarter of our performance. We did make some adjustments last week. We're still making some this week as well in our programs, and we think we're going to get back on track. We're confident at that, as a matter of fact. So in crypto, our good friend Elon Musk, I had to use this picture because he's just a crazy guy. I mean, it's amazing what Tesla has done, and of course SpaceX, but he's able to get these vehicles launched out of Florida and up into orbit here as a private company. And I respect him for that, but he does definitely have, in my opinion, too much to say about the direction of Twitter. That said, it's a free world and he should be able to do that. My bigger concern about crypto is that one person has that much sway over a market. Now, I don't think anything that Jay Powell or Joe Biden or even Donald Trump could say would move the market 25, 30, 50%. But Elon Musk can almost single-handedly move crypto 40%. And to me, that just says we still have, while it may be an interesting asset, it's an immature asset class for typical investors. Am I invested in it? Yes, still. Am I adding to my holdings? A little bit here at the bottom. I did that. But I'm not adding any more right now. I'm going to wait to see what the recovery is like. But I know that you guys have an interest in crypto, and that's why I keep mentioning it on every show. For those of you that missed last Thursday night, or if you really, really enjoyed it and you want to see it again, Leo Klinstein just was a wonderful guest, and I hope that you'll go back. The show is on our YouTube channel. Just play through it. You can skip right to his interview if you don't want to watch the news section that I brought you. But just listen to his interview, guys. It's really important for you to understand his background, coming in as a Russian immigrant with basically hardly any money in his pocket at all in his 30s, to now becoming a very successful businessman, and the risk that he sees to our capitalist system and what's at stake if the radical forces that are currently in control of this government were to actually take hold. And I hope that you'll go back if you missed it. Even if you saw it, I hope you'll go back and watch it again. So we're going to have some changes. You saw the thumbnail. This is actually the last Monday market mashup that I'm going to do, at least until Labor Day. And for that reason, or I should say, I'm going to do what I'm going to call an evergreen series. About 10 years ago, I wrote a book with Dr. Dave Gursky called Not Your Father's Retirement. And we're working on how we're going to brand this series, but it's going to be evergreen in that it's not going to be market sensitive. In other words, you can watch it on a Monday or a Tuesday or a month later, and it's still just going to be as timely, because the retirement principles we talked about in the book at that time, while I will update them, a lot of them still hold very important and time eternal, so to speak, as far as how you should be saving for your future, obstacles you should avoid. And that's what I'm going to use. I'm going to plan to upload those every Monday. And you can watch them. You can binge watch them. I've had a couple people say, yeah, sometimes I miss your show and I watch 3 or 4 at one time. I'm glad to see that. Because, again, this is not time-sensitive material. We call it evergreen in the industry. I'm hopeful that you'll watch it and, give me some feedback if it's useful to you. In addition to that, we've got some travel, Alice and I, over the summer. So our Thursday night shows, I'm going to be off this Thursday night. I told you that in the last Thursday program because we're just going to have a Memorial Day weekend here with one of our children and her family. I'll be online the next 2 Thursdays after that, and then we're traveling for 2 Thursdays. So just watch the emails for the updates on that. I'm guessing I'll probably have about half as many live shows over the summer because we're all traveling, but you will have the Evergreen series from Your Not Your Father's Retirement, and I hope that you will enjoy that. So that is our show here for tonight, Monday, May 24th, and just thank you guys for being with us all this time. I'm hopeful that you'll find this new Evergreen series to be interesting. I'll continue to tweet every single day, keep you up to date on what I'm seeing in the markets. The earnings season's winding down, and it won't pick up again until about the 3rd week of July, which is when things get busy. Of all the earnings season months, July is usually the quietest. So I'm pretty comfortable, coming to you guys a little bit less as we all get out and, without masks and go back to life as normal. It took a while, 15, 16 months to get back to life as normal, but I'm looking forward to it, and I hope you are too. So we will see you soon, reminding you that at CB3 Financial Group, we don't just manage your assets, we become one of them. We can hope that we continue to do that as we go forward. Hey, you guys have a great Memorial weekend coming up, and we'll see you next time.